2022 saw a healthy recovery in global gold demand. It was the strongest year since 2011, and some of the factors driving demand throughout the year were geopolitics, high and rising inflation, monetary policy, and China's journey through zero COVID and beyond. Retail investors continued to buy large volumes of gold bars and coins last year, the most since 2013's record. And high inflation was really a key motivator for these purchases, driving investors to look for gold for its wealth protection. ETF holdings saw a drop in holdings, however, during the year, as investors were more focused on rising interest rates and the stronger dollar. But the drop in holdings was actually smaller than we had seen the previous year, so ETFs had less of a negative impact on demand overall in 2022. Jewellery demand was resilient. It softened 3% on a consumption basis. And really that was no mean feat, considering that China had a 15% annual decline. And Indian demand slowed very sharply in the fourth quarter, in line with the strong rise in local gold prices. The big surprise of the year was central banks. They bought more than they had bought for 55 years. Gold's performance in times of crisis and its role as a long-term store of value continues to underpin demand by the sector, according to the results of our annual central bank surveys. The supply of gold increased slightly in 2022, although mine production stopped short of its 2018 high. And recycling was broadly stable, with limited evidence that the global economic slowdown has yet generated much distressed selling. Gold Demand Trends goes into a lot more detail on all of these themes, as well as giving our outlook for 2023. It's available now for free download from goldhub.com.